class. Today I'd like to talk to you about Chapter 3, filing Form 941 and when the deposits of your taxes are due. So bear with me just a minute. I will share my screen with you. All right. Today, what I've done is I've gathered some notes to kind of paraphrase and to discuss with you about your returns that are required for Social Security purposes and when the deposits of the taxes are due. So as you know, in this chapter, chapter 3, we're talking about employers withholding FICA taxes from their employees' paychecks, and that the employer is also responsible for paying a share of FICA on behalf of the employee. So I want to stress to you that the employers are liable for FICA taxes. They also talk to you about when you are completing Form 941, which we're going to be doing in some upcoming videos about income taxes that would also be withheld from employees' paychecks. The income taxes is discussed more in Chapter 4. So in this chapter, for purposes of completing a 941 form that the employer has to fill out and send to the IRS for showing how much taxes are owed to them. Then for income tax purposes, we're going to talk to you about how to calculate those in the next chapter. They'll be given in this particular chapter. You know that in Chapter 3, we are learning how to calculate the FICA taxes. And so now what we need to do is learn how to complete the forms that we need to send to the IRS and when we need to complete the deposits of our taxes to the IRS. First of all, every employer, with the exception of those employing agricultural workers, is required to file a quarterly 941 form. And on this quarterly 941 form, you will be showing the amount of FICA taxes that you have withheld from your employees, as well as the FICA taxes that you as the employer are going to be contributing, and the income taxes that we have withheld from the employees' paychecks. All of those are going to go on the quarterly 941 form. Or in some cases, some companies may have to file an annual return or a 941 form. And it just depends on the amount of taxes that have been withheld during a previous period as to who files quarterly 941 form or whether they can file an annual return, which is a 944 form. In this chapter, we're going to be discussing mainly the quarterly 941 form and how to prepare it. Now, notice that there was an exception for agricultural workers. They are required to file Form 943, but this form is very similar to the 941 form in that agricultural worker employers also withhold FICA taxes from their employees' paychecks as well as income taxes. The deposit requirements for depositing FICA and income tax. Remember, FICA tax is what we're discussing in this chapter, which would be your Social Security and your Medicare tax. And the income taxes that are withheld will vary according to the total amount of the taxes involved during what we call a look-back period. So the requirements for depositing FICA taxes just depends on how much FICA taxes have been withheld during a look-back period before you'll know when it is that you need to make deposits to the IRS of the taxes that you've withheld from your employees' paychecks and that you've contributed on behalf of the employee. The look-back period consists of 4 quarters. It's 1 year that begins on July 1st of the preceding year and goes to June 30th of the current year. So we have to look at the look-back period first to see how many taxes we're going to be paying. And that will tell us whether or not we're going to be a monthly depositor of those taxes or a semi-weekly depositor of the taxes, or whether or not we're going to have to follow what is called a one-day rule. So I want to go over those rules with you. So if the amount of the taxes withheld is less than $50,000 during the look-back period, that's the 4 quarters beginning the previous July 1st and going through June 30th of the current year. If it's $50,000 or less, we will be considered to be a monthly depositor. If we're a monthly depositor, the deposit of the taxes is due on the 15th day of the following month. So if we are withholding employees' taxes and the taxes that we have withheld during the look-back period for the last preceding 1 year period that began on July 1st and ended on June 30th, then if we are a monthly depositor, we're going to deposit the taxes on a monthly basis. And the deposit will be due on the 15th day of the following month. If we have taxes that we withhold that are more than $50,000 during the look-back period, employers are considered to be semi-weekly depositors. If you're a semi-weekly depositor, the due date depends on when the pay date is for the employees. If the pay date is Wednesday, Thursday, or Friday, the deposit is going to be due on the following Wednesday. So if you pay your employees on the pay days of Wednesday, Thursday, or Friday, the deposit is going to be due on the following Wednesday. If the pay date is on Saturday, Sunday, Monday, or Tuesday, the deposit will be due on the following Friday. So if you are a semi-weekly depositor, you have withheld FICA taxes and income taxes that are more than $50,000 during the look-back period, then you have to determine when your pay date is, and that pay date will determine when your deposit is due. If it's Wednesday, Thursday, or Friday that your pay date is on, the deposit is going to be due on the following Wednesday. If the pay date is Saturday, Sunday, Monday, or Tuesday, the deposit is due on the following Friday. There's an exception to this rule. If the amount of taxes is more than $100,000 on any day during the deposit period, the deposit is required on the next banking day. This is what we call the one-day rule. So if you've got taxes of $100,000 that you've withheld at any point in time, you've got to make a deposit of the taxes on the next banking day. The depositor will still be classified as a semi-weekly depositor for the remaining period in the look-back period. So it all depends on the look-back period and the amount of taxes that have been withheld from the employee's paychecks and that the employer has contributed. If it's less than $50,000, you're going to be a monthly depositor. The deposit will be due on the 15th day of the following month. If you're a monthly depositor, then every month you've got to pay the taxes, and they're due on the 15th day of the following month. If you are a semi-weekly depositor, it will be because your taxes that you withheld are more than $50,000. Then it depends on the pay date. If the pay date is Wednesday, Thursday, or Friday, your deposit is going to be due on the following Wednesday. If the pay date is Saturday, Sunday, Monday, or Tuesday, the deposit is due on the following Friday. If the amount of the taxes is more than $100,000, the one-day rule applies, and you have to pay the taxes on the next banking day. If, however, the amount of taxes is $2,500 or less, the employer can choose to make the deposit at the date the 941 form is due. But that's only if it's $2,500 or less. And this is a choice for the employer. The employer could also choose to use the monthly depositor rule for this because the taxes are less than $50,000. They've got a choice there. If you are a new employer, the employer will deposit monthly until a look-back period is established. And that's unless the deposit is more than $100,000. If it's $100,000, then they got to use the one-day rule and make the deposit on the next day, and they will be considered semi-weekly depositors for the remainder of the look-back period if the deposit is more than $100,000. But if the employer is new and you don't know when you have to file, you're going to deposit monthly unless you accumulate $100,000 or more, then it's daily. There is what we call a safe harbor rule that comes into play if the amount of your deposit is short. So if you make a mistake on the deposit and the short or the amount of the mistake is less than the amount of the deposit required, then we can use what is called the safe harbor rule. The short is what they call a shortfall. So if you make a mistake on the deposit, you've shorted the deposit. In other words, you have not deposited the correct amount. If it's within $100 or less, then you get to use the safe harbor rule, and you won't be penalized unless you make that deposit after the due date of the quarterly return. So the short, whatever you're short, if you're $100 short, or if you are 2% of the amount that is due of the employment taxes, you can use the safe harbor rule. If the shortfall is $100 or less, or 2% of the amount of the employment tax required to be deposited, and you are a monthly depositor, the short must be deposited by the due date of the quarterly return. if the shortfall is $100 or less, or 2% of the amount of the employment tax required to be deposited, and the depositor is semi-weekly, the short must be deposited by the first Wednesday or Friday falling on or after the 15th day of the month following the month in which the deposit was required to be made. And we'll be working some of these in the problems that are going to be coming up in the upcoming videos. Most employers file their deposits electronically. To enroll, an employer must complete Form 9779 with the IRS. So if you're going to file electronically, your employer has to complete Form 9779 with the IRS. The enrollment takes about 3 to 6 weeks, and the IRS will send you a PIN number and instructions for filing the deposits electronically. There are 2 methods of electronic deposits that you can choose from. You can use either this method or this method. The ACH method, or the debit method, is where the Treasury financial agent is asked by the employer to withdraw the funds from the employer's bank account and route them to the Treasury account at the Federal Reserve Bank. So you, as an employer, if you choose the ACH debit method, you instruct the Treasury financial agent to withdraw the funds from the bank, and then the Treasury financial agent will route them to the Treasury account at the Federal Reserve Bank. If you choose the credit method, this is where you, as the employer, will instruct your bank to send each payment to the Treasury account at the Federal Reserve Bank. So you have a choice of the 2 electronic methods. There is, however, an exception to depositing taxes electronically when the taxes are $2,500 or less, and the employer has chosen to pay the taxes when the return is due. This system, taxes should be initiated 1 day before the quarterly tax return is due to be considered timely. So if you have $2,500 or less and you need to deposit your taxes, you don't have to do them electronically. You can deposit them when the return is due. However, you need to have it in place 1 day before the tax return is due to be considered timely for the IRS. And so these are some of the rules that I wanted to talk to you about today. In the next videos that I'm going to show to you, we're actually going to be filling out a 941 form. And so you need to know these rules before you can understand how to fill out that 941 form. So that's why I wanted to emphasize these to you. I will post these notes electronically to Blackboard so that you can look at them or pull them down and study over them. These notes are also in your textbook. And if you want to look at your textbook, starting on page 317 and going to 321, that's basically what I've covered in this particular video. So I'm going to stop here, and we'll see you the next time. Bye-bye.